When a single announcement from China wiped out over $600 billion from AI stocks in just 48 hours, Wall Street went into full panic mode. But here's what most investors are missing. While everyone's focused on the headlines about cheaper AI models, 4 companies are quietly positioning themselves for what could be the biggest AI profit opportunity of 2025. One of them just reported a mind-blowing 70% surge in the past 12 months. Another is growing its data center business faster than NVIDIA. The third one? It actually went up 9% when every other AI stock was crashing. And the fourth? Well, it's so deeply connected to a classified $500 billion government AI project that most analysts aren't even factoring it into their valuations. Today, I'm going to show you why the DeepSeek panic has created a rare buying opportunity in these 4 powerhouse stocks. More importantly, I'll reveal why the market's reaction is completely missing the bigger picture. But before we dive into these hidden gems, here's something crucial you need to understand about the DeepSeek situation. You see, when reports first emerged claiming DeepSeek had developed an AI model for just 1/10 of the usual cost, it sent shockwaves through the market. Major tech giants saw their market caps plummet. We're talking about drops of even 20% in a single day. But here's the plot twist that Wall Street seems to be ignoring. New reports are now suggesting that DeepSeek's actual costs were up to 10 times higher than initially claimed. Sound familiar? This isn't the first time we've seen overblown claims out of China, and it probably won't be the last. Listen, in my 15 years of market analysis, I've seen this pattern play out time and time again. The market overreacts to headlines, creating golden opportunities for those who understand the real story. Let's put this into perspective. The global AI market isn't shrinking. It's actually projected to hit $1.8 trillion by 2030. That's not just a number I'm throwing out there. That's based on actual enterprise spending patterns and infrastructure build-out plans. But here's what makes this situation different, and frankly, more exciting than any tech sell-off I've seen before. We're not just looking at a simple market correction. What we're seeing is a massive disconnect between Wall Street's knee-jerk reaction and the actual fundamentals of these companies. Think about it. Did the DeepSeek news suddenly make businesses need less AI computing power? Did it make cloud infrastructure less critical? Did it make enterprise AI solutions less valuable? The answer is a resounding no. In fact, let me show you something fascinating that most investors are completely missing. While everyone's panicking about AI chip prices, the real story is in the exponential growth of AI applications. Companies aren't just buying AI technology anymore, they're completely restructuring their operations around it. And this is where our 4 hidden gems come into play. Before I reveal these 4 companies, you need to understand that we're not just looking for any AI stocks. We're looking for companies that meet 3 critical criteria. They have established market positions that can't be easily disrupted. They're showing accelerating revenue growth, not just promises. Most importantly, they're trading at valuations that make absolutely no sense given their market position. But before I reveal these 4 powerhouse stocks that could define the next chapter of AI investing, do me a quick favor. Smash that like button and hit subscribe, because you won't want to miss what I'm about to share about these hidden opportunities that Wall Street is overlooking. Now, let me introduce you to our first company, Taiwan Semiconductor, ticker symbol TSM. Let's start with what I consider the most misunderstood powerhouse in the AI revolution. This isn't just another chip company. This is the company that literally powers 90% of advanced AI infrastructure worldwide. When I tell you their market cap is $912.48 billion, making them the 9th largest company in the US market, that's not even the most impressive part. Here's what's mind-blowing. Over the past 12 months, this company's stock surged by an incredible 70%. And yet, after this DeepSeek news, the stock dropped 15%. Let me tell you why this is probably the most irrational market reaction I've seen in years. Think about this logically for a moment. When you're building AI infrastructure, you have 2 options. You either go with the most powerful, advanced chips, or you opt for more cost-effective solutions. Here's the brilliant part. This company wins either way. They're not just NVIDIA's manufacturer. They build chips for practically every major player in the game. AMD, they build for them too. This company has positioned itself at the center of the entire AI ecosystem. Now let's talk numbers because this is where it gets really interesting. We're looking at a company that grew its revenue from $47.6 billion in 2020 to a staggering $88.1 billion by the end of 2024. But here's what's really exciting. Analysts are projecting 28% growth this year, followed by 19% growth each year for the next 2 years. And remember, these projections came after the DeepSeek news. But I know what some of you are thinking. What about the China risk? What about Taiwan? Yes, geopolitical tension is real, but let me share something most analysts aren't talking about. This company's strategic importance is so massive that it's not just a corporate entity anymore. It's a crucial piece of global technological infrastructure. The world's major powers have too much at stake to let anything disrupt its operations. Here's what really seals the deal for me. We're looking at a forward PE of just 23.1 times, with a PE-G ratio of 0.8. For those of you who might not be familiar with these metrics, let me break this down. We're talking about a company that's growing faster than 90% of the market, yet it's trading at a value stock multiple. The average analyst price target is sitting at $244, suggesting a 16% upside. But honestly, I think that's conservative given the growth trajectory we're seeing. Now, let me introduce you to our second company, Advanced Micro Devices ticker symbol, AMD. Now, some of you might be thinking, wait a minute, you just talked about Taiwan Semi and now you're giving us AMD? Yes, I am. And there's a brilliant reason for this that most investors are completely missing. While everyone's focused on the DeepSeek drama about cheaper AI models, AMD is quietly revolutionizing the mid-range AI chip market. Let me break down exactly why AMD has my attention. With a market cap of $178.77 billion, the stock dropped just 7% after the DeepSeek news. That's remarkably resilient compared to competitors. And here's what makes this particularly interesting. If the market does shift toward more cost-effective AI solutions, AMD is perfectly positioned to capture that transition. Let me share some numbers that really caught my attention. In their data center segment, AMD achieved 25% quarter-over-quarter growth. Here's the kicker. That's significantly faster than NVIDIA's 17% growth in the same period. In fact, for 2 straight quarters straight, AMD has been widening this gap. Remember at the start of 2024, NVIDIA was outpacing AMD by 20 percentage points. Now the roles have completely reversed. Here's where AMD's growth story gets really compelling. In 2019, their revenue was $6.7 billion. Today, we're looking at $25.6 billion for the full year 2024. Looking ahead, analysts are projecting 25% top-line growth in 2025, followed by another 23% growth the following year. Now, let's talk about what really makes AMD a potential goldmine right now. We're looking at expected earnings growth of 49% this year, followed by 39% growth next year. With projected EPS of $4.95 in 2025, the stock is trading at a forward PE of just 24 times. But here's what really excites me. AMD's PEG ratio is sitting at 0.5. Remember, anything under 1.0 typically signals an undervalued stock. The Wall Street consensus is clear on this one. Analysts rate AMD a buy with a 12-month price target of $161, suggesting nearly 40% upside from current levels. Given their momentum in the data center space and their strategic position in the cost-effective AI chip market, I believe this target could prove conservative. Now, let me introduce you to our third company, Salesforce ticker symbol, CRM. Now, we're shifting gears from chips to software. And this is where the AI story takes a fascinating turn. With a market cap of $316.59 billion, Salesforce isn't just any software company. It's one of the rare AI-related stocks that actually gained during the DeepSeek panic, climbing 9% while others tumbled. But what's even more impressive? Over the past 12 months, shares are up 15%. Here's what most investors are missing about Salesforce's AI advantage. While tech giants like Meta, Microsoft, and Alphabet are pouring billions into AI infrastructure, Salesforce's capital expenditures have barely budged from pre-pandemic levels. They're not building the expensive infrastructure. They're leveraging it. This capital-light approach to AI is exactly why smart money is flowing into CRM. Let's look at their growth trajectory, because these numbers tell an incredible story. Salesforce has grown from $17.1 billion in fiscal 2019 to what analysts expect will be nearly $38 billion in fiscal 2024. But here's where it gets really interesting. Looking ahead, analysts are projecting 9% revenue growth in 2025 and 10% the following year. Now pay close attention to these efficiency metrics, because this is where Salesforce really shines. While revenue is growing steadily, earnings are expected to grow even faster, 12% this year and 14% the following year. With analysts expecting EPS of $11.23 this year, the stock is trading at a forward PE ratio of 30.6 times. Here's why that's significant. It's well below their 5-year average of 40 times. In other words, we're getting a more efficient, AI-enhanced Salesforce at a substantial discount to its historical valuation. Wall Street seems to agree with this assessment. Analysts rate the stock a buy with an average 12-month price target of nearly $400, implying 16% upside from current levels. But here's why I think they might be underestimating Salesforce's potential. They're not fully factoring in how AI integration could accelerate their efficiency gains across their entire platform. Now, let me introduce you to our final company, Oracle, ticker symbol ORCL. Let's wrap up with what might be the most intriguing AI play of all. Oracle, with its massive $482.06 billion market cap, is probably the last company most investors think of when it comes to AI. But here's what makes this story fascinating. Over the past 12 months, the stock is up over 47%, even after dropping 16% on the DeepSeek news. And if you think that drop was justified, wait until you hear what Oracle has been quietly building. Here's what most investors are missing about Oracle. There are really two main types of AI that matter. There's generative AI that everyone's talking about, and then there's enterprise AI where Oracle is absolutely dominating. But it gets better. Oracle is closely intertwined in the $500 billion Stargate project that President Trump recently announced, which is further going to push even more investments into the world of AI. Let's look at Oracle's numbers, because they tell a story of incredible efficiency. Their revenue has grown from $39 billion in May of 2020 to $53 billion in May of 2024. Now, I know what you're thinking. That's not explosive growth. But here's the brilliant part. Looking ahead, analysts are projecting 9% revenue growth in 2025, accelerating to 13% in fiscal 26. This acceleration is key. Now, let's talk earnings, because this is where Oracle really shines. We're looking at 11% earnings growth in 2025 and 14% in 2026. With analysts expecting EPS of $6.15, the stock trades at a forward PE of 27.7 times. Yes, that's actually above their 5-year average of 18 times. But here's why that premium is justified. Oracle has completely reinvented itself over the past few years, increasing revenues while maintaining strong operating margins across the board. Wall Street analysts have set a 12-month price target of $193, implying nearly 15% upside from current levels. But here's my take. Given Oracle's strategic position in enterprise AI and their involvement in the massive Stargate project, I believe this is a company that can push past the 200 level by the end of 2025. Now that we've looked at these 4 incredible AI opportunities, Taiwan Semi, AMD, Salesforce, and Oracle, let me share why I believe this DeepSeek panic has created a perfect storm for smart investors. When we look at the market's reaction, losing $600 billion in market cap over an unverified claim about AI costs, it's clear that emotion, not logic, is driving these prices. Think about what we've uncovered today. TSM powers virtually all AI infrastructure. Regardless of which chips win, AMD is actually outpacing NVIDIA in data center growth. Salesforce gained 9% when others crashed, showing the power of their capital-light AI approach. And Oracle is positioned to capitalize on both enterprise AI and the massive $500 billion Stargate project. I laid out all the reasons why I like these 4 stocks, and they each offer something unique for different types of investors. If you're looking for pure AI infrastructure play, TSM gives you broad exposure. If you want high growth potential, AMD's closing the gap with NVIDIA faster than anyone expected. For those seeking software efficiency plays, Salesforce's capital light model is incredibly attractive. And if you want a mix of enterprise stability and massive government project potential, Oracle could be your best bet. All of this DeepSeek news has been a knee-jerk reaction. It's going to have an impact in some shape or form, but having the likes of NVIDIA lose $600 billion off their market cap? That seems to be overdone to me. Now, I have a question for you. Down in the comments section, let me know which of these 4 stocks are you most excited about moving forward in this new world of AI? Which one do you think will hit its price target first? And if you haven't done so already, make sure to hit that like button and subscribe to the channel for more in-depth analysis of the best opportunities in the market. This content is for educational purposes only. Always conduct your own research and consult with a financial advisor before making any investment decisions. Past performance does not guarantee future results. Thanks for watching.